Limited liability companies, or LLCs, are horrible. LLCs save me money on taxes. LLCs are expensive. Are these statements true? Let's rip all those questions apart. Let's get right to it. My name is Kenner French, and I'm with vastsolutionsgroup.com. We do tax, finance, and artificial intelligence to help small business owner clients. Let's get right to it. This is going to be of immense value. Limited liability companies, or again, LLCs, are a popular choice for entities for small business and investment activities. LLC owners are called members. Single member LLCs have one owner, although spouses who jointly own an LLC in a community property state can elect treatment as a single member LLC for federal income tax purposes. We'll call LLCs with two or more members multi-member LLCs. A key point: LLCs are not corporations, but LLCs can sign similar legal protection to their members or owners. Here are some important facts to know about LLCs, which may dispel some of my earlier points. LLCs offer legal protection. Using an LLC to conduct a business or investment activity generally protects your personal assets from LLC-related liabilities, similar to the legal protection offered by a corporation. As you may know, liabilities can arise from simple things like Federal Express guy, let's say, slipping on the banana peel someone left on your front steps, or in seemingly endless and complicated ways if you have employees. Now, a key point: as a general rule, no type of entity, including an LLC, will protect your personal assets from exposure to liabilities related to your own professional malpractice or your, let's say, other acts. A tort act, it's a wrongful deed other than by a breach of contract, such as a negligent operation of a motor vehicle resulting in property damage or injuries. The issue of liability protection offered by an LLC is a matter of state law. Again, state law. Seek advice from a competent business attorney for such details. Single member LLC tax basics. Let's go over that. Single member LLC businesses owned by individuals are treated as sole proprietorships, sole props as it may be, for federal income tax purposes unless you elect to treat the single member LLC as a corporation. In other words, the default federal income tax treatment for a single member LLC is a sole proprietorship. Under the default treatment, you may simply report all the single member LLC's income expenses on a Schedule C of your 1040 form. If the single member LLC business activity generates net self-employment income, you will report that on Schedule SE of your 1040. Now, if the single member LLC activity is rental activity, you report the rental income and expenses on Schedule E of your 1040. Say you have a farm or ranch, you report the numbers for your farming or ranching activity on a Schedule F. Pretty simple. You don't need to file a separate federal income tax return for a single member LLC. And other things being equal, simple is good generally. Let's go over three key points. The big federal income tax advantage of operating as a single member LLC is it's totally simple. The big non-tax advantage is liability protection under applicable state law. As mentioned, you can elect to treat a single member LLC as a corporation for federal income tax purposes, but we don't recommend that generally for reasons we'll get to in just a little bit, come to think of it. Multi-member LLC tax basics. You're going to like this. Multi-member LLCs are treated as partnerships for federal income tax purposes unless you elect to treat the LLC as a corporation. In other words, the default federal income tax treatment of a multi-member LLC is a partnership in status. Under the default treatment, you must file an annual partnership tax return called a 1065. From the 1065 partnership return, the LLC issues an annual Schedule K1 to each member to report their share of the income and expenses. The member then takes those taxable and deductible amounts into the account on the member's own return, or their 1040 for a member who is an individual. The LLC itself does not pay federal income tax. This arrangement is called pass-through taxation because the income and expenses from the LLC operations are passed through to the members who then take them into account on their own returns. The same pass-through taxation concept applies to, let's say, to entities set up as regular partnerships under certain state laws, depending. Electing to treat the LLC as a Corporation for tax purposes is important. You have the option of electing to treat a single member LLC or multi-member LLC as a corporation for federal income tax purposes. You do that by filing what's called the IRS Form 8832, an entity classification election, to change the default classification of a single member LLC or multi-member LLC to a new classification as a corp. If your desire is to have your LLC treated as an S corp, which you can elect that status by doing the 2553, or it can elect a C corp status by Form 8832, and then the S corp treatment on the IRS Form 2553. While there may be non-valid tax reasons for electing to treat an LLC as a corp, we think tax reasons generally dictate taking that step. You got to really think that through. If you conclude that there are tax advantages to electing corp status, why not just actually incorporate your operation in the first place? That's simpler. Keeping your tax matters simple is generally a good policy. Let's go over electing corporate status from the LLC, which could have unintended consequence. For example, you can potentially elect federal income tax free gains from stock in a qualified business corporation, but you must own shares and hold them for over 5 years to cash in on a super favorable deal. Can an LLC ownership interest count as a QSBC stock for purposes? Generally speaking, not. If you're looking for QSBC stock breaks, just set up a corporation in the first place. Here's another example. A specific federal income tax break allows you to deduct annually $50,000 of losses from you selling eligible small business stock, or $100,000 if you're married and a joint filer, and treat the loss as a tax-favored ordinary loss instead of a tax-disfavored capital loss. Can an LLC interest count as an eligible stock for this purpose? Generally not. It's not stock. Avoid the problem. Set up a corporation correctly in the first place. This stuff is way complex. I get it. If you have questions, call us 888-808-8278. Check us out on the web at vastsolutionsgroup.com. Once again, Ken or French, vastsolutionsgroup.com. Hopefully this has been helpful. It's been a